Hi everyone. Welcome to another episode of In Conversation by Advisor Coach. Today In Conversation for the very first time we have Mr. Ashish Patil, Head Equity Products with Bandhan Mutual Fund. Hi Ashish, welcome to In Conversation with Advisor Coach.
Yeah, thank you, Suren, for giving me the opportunity to speak with you today.
Always a pleasure, always a pleasure. So Ashish, Bandhan Mutual Fund has launched their new fund offer of Bandhan Contra Fund on the 10th and closing on the 24th of August. 10th of August and closing on 24th of August. Now, contra as a strategy is not known well to many, right? A lot of people confuse, what contrarian investment is all about, etc. So, could you dive deep and let our viewers know as to what a contra strategy is all about, and also what Bandhan Contra Fund is all about?
So, if you look at the markets, especially, most people feel safest when they are moving with the crowd. When everyone is buying, we want to buy. But when panic sets in, we all want to sell. But if you look at some of the greatest investors in history, they have built their fortunes by doing exactly the opposite. So there is one famous quote which says that, be fearful when others are greedy and be greedy when others are fearful, is a very good example of, contra investing. So contra investing is about identifying opportunities where market sentiment has become overly optimistic or excessively pessimistic. It's about looking beyond headlines, questioning consensus, and having the conviction to act when others hesitate. Contra investing is about identifying opportunities where market sentiment has become disconnected from reality. It's about buying businesses that have fallen out of favor due to business challenges, macroeconomic concerns, or simply negative investor sentiment. So one thing you would have seen that whenever there is any kind of a headlines which comes, this sector is uninvestable, the growth is over, or we always hear some of the news like the market will never recover as such. Such narratives often dominate investor thinking and drive decisions. Yet historically, if you look at the data, markets tends to overreact both to good news and bad news. The
True.
contrarian investor looks beyond these headlines and asks a very simple question: what if the market's perception is wrong? At its core, I believe that contra investing is an exercise in exploring the gap between the perception and reality. Contra investing essentially means that a fund manager will exploit the behavioral biases which are present in the system.
Sure, sure. So you spoke about the investor behavioral, investing. So which biases actually affect the most to your mind?
So if you look at the markets as a whole, psychology plays a very important role in the market, especially in the short run.
Hmm.
There are various biases which are present among the investors, because of which they make mistakes a lot of the time. Like, one I can take an example of is a cognitive bias. If you ask a set of, drivers that, are you a good driver? Most of them will say that, they are good drivers. But if you ask them that whether other people who are driving the on the road are they good or bad, then most of them will reply as bad drivers. Okay, so usually this is what happens with investing as well. When we ask people, are you influenced by the crowd, the most of them will say no. But if you ask them, are others influenced by the crowd, is there any herd mentality which follows, then at that particular point they will definitely agree to that others are influenced by the crowd. So this is
Sure.
one cognitive bias which I feel which impacts the investors. The second is basically hindsight bias. I conduct a lot of sessions wherein I ask the investors or the participants who have joined that whether you would have invested when nifty comes to 8,000. So all the hands go up. But now when I just rephrase that question, that how many of you had invested when the nifty had actually gone down to 8,000 levels during the covid crash which happened in March 2020, most of the hands come down. So this is where hindsight bias is also there, wherein people would like to look at if such a scenario happens again, then I will buy that. But obviously when that actual scenario happens, then very few investors take a call to buy. So playing a contra call is very difficult. both at the investor level as and that is where the contra fund also helps the investor to take such call. And third, the most important bias which I believe is the recency bias. This is nothing but a momentum bias which a lot of people have. And the answer to that, why this recency bias is so natural to the people, is because we are a lot mechanical in nature. Mainly what I'm trying to say over here is that if something works for us, we want that thing to work again and again.
Hmm.
I, coming from an engineering background, I have seen that if I create a particular machine in that particular way, like suppose I take an example of a car, that you press the accelerator button, then the car obviously moves forward. So that is what gets stick to our mind, and we become very mechanical in nature, and whatever has given us good results, we expect that the same good results will continue to follow in
So
the
true.
future as well. But let's apply this same logic to the equity markets. Then what you will see that markets are move in cycles. There will be a bull market, there will be a bear market, there will be a sideways market, and it all moves in a cyclical in nature. And that's why what has already worked for you today may not work for you in the future. So that is how the markets perform. And if an investor has any kind of a recency bias or a momentum bias, then obviously he will definitely find it challenging to make money in the equity markets.
Absolutely. And I think the recency bias, which you mentioned, is a very, very recent behavior which has come up, which has been seen quite a lot now.
Yes.
So, what are some of the investment strategies under the contra strategy?
So, if you talk about contra investing, there are four main opportunities which the fund manager has.
Hmm.
One is a turnaround of the business. So, suppose a business is going through any kind of a challenge, and then it does a turnaround, or starts a new kind of a business as well. That because of that, the turnaround of the stock happens, and the profitability of the company improves,
Yes.
and the price starts to take a turn. Okay, so that is one opportunity which the fund manager has. Second is macros driven. Okay, so we all have go through various phases wherein the macros keep changing. There is a high interest rate scenario, there is a low interest rate scenario. So such kind of a scenarios also impact the stocks as well, and that is also creates a lot of contra opportunities for the fund manager. The third is if you look at the sentiments. Okay, so this is also one of the very
Mhm.
important uh, opportunity for the fund manager to buy into, wherein if there is any kind of a bad sentiment which happens with any particular stock or even a sector as well, that can go through a very especially in the bear market, the stocks continues to fall much faster. And especially if the sentiments are positive, then the stocks may go well above the intrinsic value as well.
Mhm.
So
Mhm.
that is where contra again opportunities come up to the fund manager. And finally, there is a sector wide overhang which also happens. Like some of the sectors we have seen that a lot of time the sector doesn't deliver any kind of a returns. Like you would be aware about the PSU bank story, especially
Mhm.
from 2014 to 2020, or even the
Mhm.
power sector. It also went through such a long phase wherein they were not able to perform much. And these are all the opportunities which the contra fund manager has while investing in a contra fund.
Sure. So, Ashish, why do you think that investing in a contra strategy is good at this point in time?
So to understand that why we have come up with our Bandhan contra fund, especially at this particular point of time, we need to understand our market outlook as well.
Hmm.
So what has happened in the last 2 years is that Indian markets have not performed. The Nifty 50 has given a very flat kind of a returns in the last 2 years. There were two major reasons which has impacted the Nifty 50 returns. One is the geopolitical tensions which has happened, especially the US Iran war, which shot up the oil prices from $70 per barrel to $120 a barrel. And as you would know that as oil prices rises, both our current account deficit and the fiscal deficit also takes a toss. So that has a direct impact on our Indian economy. And the second challenge which the Indian markets face is especially due to the AI theme, which went pretty strongly in the
Hmm.
last 2 years, especially where lot of this FPI money was chasing these particular stocks in various countries, and that is where Indian markets didn't perform that well in the last 2 years. Because of that, what happened is that I will just share my screen. So because of that, what has happened in the last 1 year is that our rupee has depreciated very strong
Hmm.
with respect to the dollar. So if you look at the dollar depreciation, the average dollar depreciation in a year is around 3.5%, but it has depreciated by more than 10% in the last 1 year itself. Also, if you look at euro pound also over there also our depreciation was much higher than the average depreciation which has happened. And also if you look at yuan also there you will see that our depreciation has been
Hmm.
at a much higher rate.
Hmm.
So
Hmm.
those are the challenges which the India has faced in the last 1 or 2 years. But we are seeing some kind of a green shoots, which we are seeing that what we feel is that the AI trade has started to peak at this particular point of time. Also, if you look at the last 1 year returns in dollar terms, especially our 1 year returns was negative 12%. But if you look at the emerging market index and the S&P 500 index also, both were above 40% and 20% in the last 1 year. So there is a big amount of divergence which has happened in our performance vis-a-vis the other markets which are there. And that divergence is what we believe that that divergence will start to come down bit by bit, and there are some green shoots which we are seeing,
Hmm.
especially in the AI stocks, wherein a lot of money was chasing these particular stocks in the last 2 years. But if you look at the data for this particular calendar year itself, then you will see that almost around $100 billion of sales of outflows has happened in the South Korean market, and around $40 billion of outflows has happened in the Taiwanese market as well. So
Hmm.
AI, as we believe, is taking some kind of a saturation, and this money which is coming out of these two particular markets, they will look at diversification perspective, and will look at non-AI kind of a countries, wherein our India fits the bill, because if you look at our GDP numbers, those numbers are pretty strong as compared to the major economies in the world, and that is where we believe that our growth story is intact. And also, if you look at the valuations, because of the 2 years, the market has not gone anywhere. Because of
Hmm.
that, the
Hmm.
valuations have also become attractive. And the next 2 calendar years is where we believe that the earnings growth will also be in double digit. One, because of the rupee depreciation which has happened. Obviously, the export-oriented companies will definitely do far better. And also, we believe that the nominal GDP, which has come down to 9% around, that also will slowly and gradually start to move towards 11% mark because of the inflation which has happened in the country. And that is where we believe that this shift in the global flows will happen, and that is where a contra kind of a strategy will be an ideal kind of a strategy at this particular point of time, because India itself is a contra market. And
Sure.
you talk about contra investing, especially there are usually three phases of the market. One is the bull phase, bear phase, and sideways market. In especially the bear market and the sideways market, there are lots of opportunities which the contra fund manager can get at this particular point of time while constructing his portfolio. And that is what we believe, that this is an ideal time for
Hmm.
launching a
Hmm.
Bandhan contra fund.
Sure. So tell me, why should investors and advisors and distributors look at Bandhan Contra Fund in particular? Because there are multiple contra funds. Do you have any illustrations also to show that to our viewers?
Okay, so basically, if you look at, our Bandhan Contra Fund, we will be having a blend of, contrarian strategy
Hmm.
with growth bias. The growth bias especially becomes very much important, for us to understand whether there will be a earnings visibility of that particular company or not in the future. So whenever, we wanted to construct a contra fund, there were two major challenges which we saw, while running a contra fund.
Hmm. Hmm.
First is that the performance of the fund can be uh, uh, pre- it can go through a very sideways kind of a trend, because what happens is that the recovery of the stocks can take a lot of time. So that was the first challenge which we identified, that the
Hmm.
recovery of the market can take a lot of time. And second is basically if the fund manager is buying any particular stock, whether he gets caught up in a value trap or not. So these were the two major challenges which we had identified, and we wanted to overcome these particular challenges, and that is where we came up with our four gate contrarian framework, wherein what we did was that our universe, if you look at, is predominantly top 500 companies. And here we have created this four filter framework for the stocks has to pass through it before becoming a part of the Bandhan Contra Funds universe. Okay,
Sure.
so first filter we are talking about is that quantitative dislocation has to happen. So basically, what we are trying to say is that we are not going to buy any kind of a momentum stocks over here. So all those stocks, will move out of the filter. Only those stocks, where quantitative dislocation, wherein, the price has corrected. So
Hmm.
only those stocks will move into the next filter. Over
Hmm.
here, what we will try to do is that we will try to analyze the reasons for why that stock has fallen. So basically, the hate diagnosis is what we will be doing over here, and we will
Hmm.
try to understand whether this fall is temporary in nature or structural in nature. Obviously, if the answer is structural in nature, then obviously it can lead to a value trap kind of a scenario for us, which we want to avoid. So again, that kind of a stocks will again be removed by the filter, and if it is temporary in nature, then it will pass through the third filter, which is wherein we will study whether there is any kind of a catalyst or trigger which are available or not.
Sure. Sure.
So whether the stock can rebound in the near future or not. Again, if the answer is no, then the stock will be removed by the filter. And if the answer is yes, then it will pass through the third filter as well. When we will be looking at balance sheet, we will be look at corporate governance, management, and all those fundamental stuffs. And if the stock passes through all these four filters, then only that stock will become part of the Bandhan Contra Funds universe. Other,
Sure.
it will get removed by the filter.
Sure.
So just for an illustration purpose, as you had asked me, so as an illustration, you can take an example of a food delivery business
Hmm. Hmm.
which had launched its IPO in 2021. So post the IPO, you could have seen that that stock had fallen by almost 70%,
Hmm.
because so it passes the first filter wherein the quantitative dislocation has happened.
Hmm. Hmm.
So now we want to study that, why there was a reason, why that stock had fallen so much. And we wanted to analyze whether, there is any kind of a temporary or structural scenario which would have happened. So this was in the year 2021, 2022, wherein, the lockdown was starting to open. And earlier, this food delivery app, so the main thesis was that, post the lockdown opens, then people will again go back to the restaurants and start having food rather than getting food delivery, which was a norm during the lockdown phase. And that is where the company's profitability will drop, and the stock will not be able to give that much returns.
Hmm.
So we wanted to understand that whether this narrative which has happened, whether it is temporary in nature or structural in nature.
Hmm. Hmm. Hmm.
So as a when we so if you look at that particular point of time, it looked very temporary in nature, because any kind of a behavioral change which happens, it takes a lot of time, to
Hmm.
go back to the normal stance. And also what we are seeing is that for that particular company, the order delivery was rising. And also it moved up to another business as well, wherein they started not only doing food delivery, but they started even the grocery deliveries as well.
Absolutely.
That
Absolutely.
also look at as a catalyst for us. That was a trigger point that this stock will continue to rebound in the future. So it passed the third filter as well. And if you look at the balance sheet of that particular company at that point of time, it had around 1,000 crores of cash which was available, uh, zero debt on their books. So obviously it had a very good headroom for the any kind of a cash burn which it had to do in the future. That is how that particular company would have passed all our filters and become a part of our Bandhan Contra Funds universe at that particular point of time.
Sure, sure, sure. Tell me, a lot of people get confused between a value investment strategy and a contra investment strategy, right? So, what's the difference between them? Some very basic differences.
Okay, so uh, so if you look at a value kind of a strategy is where what we see is that it is more of a quantitative in nature, where the fund manager focuses a lot on the uh, where the fund manager focuses a lot on the value parameters rather than what is happening in the market, any kind of a sentiments or any
Hmm, hmm,
that stuff is happening or not.
hmm, hmm,
If you look at a contra fund manager over there, obviously that fund manager will be looking more at the sentiments which are
hmm,
prevalent in that particular stock or
hmm,
market at that particular point of time. And that is where I believe that, it is more of a, qualitative in nature. And that is where, a major difference which happens wherein, the fund manager has to do a second level thinking to understand the perception, to understand the difference between the perception and reality. And that is
sure,
a mindset. The way to run this particular fund, the mindset has to be totally different when you run a value fund and when you run a contra fund.
sure.
There are obviously overlaps which can happen, like there can be three scenarios wherein which can happen in this particular kind of a environment, wherein there is a stock which has fallen, and also the sentiments have also gone bad.
Hmm, hmm,
Become a part of both value and contra as well. But there
hmm,
is a stock wherein only the value has fallen, but the sentiment is still good, especially in an FMCG company,
hmm,
wherein a bad quarter, and because of that the valuations are looking attractive, but there is no bad sentiment which has
hmm,
formed
hmm,
for
hmm,
that company.
hmm,
Then it can become a part of value, but not a part of contra.
hmm, hmm, hmm,
But then there is also a third kind of a scenario wherein what we can say is that the valuation has not fallen much, but there has a bad sentiment which has happened for that particular company. Especially
hmm,
companies which is trading at 100 P, or very high price to book ratio. Even after the fall, it continues to trade at a very higher valuations.
hmm,
Okay,
hmm, hmm, hmm.
from a from a traditional valuation matrix, it will not become a part of a value fund, but it can obviously become a part of a contra fund. So this is
Sure.
what the difference will be between a value and a contra fund.
Sure. I must say, very well explained, because there's a lot of confusion in people's mind between a value investing and a contra investing. Thank you very much for giving us these examples and explaining this extremely well. So Ashish, what percentage do you believe an investor should allocate to a contra fund in his overall portfolio asset allocation, and why?
So if you look at the contra investing strategies, it is very well praised by many of the investment gurus worldwide. Okay, and if you look at this particular fund, obviously the margin of safety will be much higher, because we will be investing in those stocks, which are beaten down, and there, the valuation challenges will not be there, and we will
Hmm,
not be
hmm,
picking up momentum stocks, as I
hmm,
told
hmm,
you earlier as well.
hmm,
So this fund especially, can become a part of a core strategy as well. Uh, if you ask me, from the market cap perspective, this will be market cap agnostic, this will be sector agnostic, this will be even benchmark agnostic also. But still, rather than putting this particular fund into a satellite kind of a fund, you can still, look at this particular fund as a, a part of your core investment
hmm,
strategy.
hmm.
And because of the one thing, which is the margin of safety, which the fund manager will be looking at in this particular fund of ours, and that is how the investors can think about investing in Bandhan Contra Fund.
Sure, sure, sure. That brings me to my last question. Through this in conversation today, Ashish, what message would you like to give to all the viewers, investors, advisors, mutual fund distributors, specifically about your Bandhan Contra Fund?
So if you look at the current market scenario, India itself is a contra play today.
Hmm.
So Bandhan Contra Fund makes much sense in the investors' portfolio today. And as I told you that, we have, come up with a lot of investment frameworks which will guard against the various risks which are, present while running a contra fund of ours. We have thought about those as well, and this fund will be managed by our CIO, Mr. Manish Gunwani, who
Hmm.
doesn't need any kind of an introduction, and also by Mr. Pratik Poddar.
Hmm.
uh, Both of them have a very good track record of managing funds in Bandhan Mutual Fund space. And that is where I believe that the investors should take maximum advantage of this particular fund and invest in this particular fund of ours.
Sure, sure. Wonderful, wonderful. So, well, for our viewers, this is Mr. Ashish Patil, Head Equity Products with Bandhan Mutual Fund, talking about the new fund, Bandhan Contra Fund, which got launched on 10th of August and closing on the 24th of August. I must say, Ashish, very deeply, very well, you explained what Bandhan Contra Fund is all about. And I think anybody listening to this podcast will have no further questions as to what a contra fund and what are the investment strategies and what kind of behavior a contra fund has, and also the difference between a value and contra fund. So, someone listening to this podcast, I must say, that will understand the specifics of a contra investing strategy very, very well, and of course about your Bandhan Contra Fund. So thank you so much for taking out time today and talking to our viewers.
Yeah, thank you, Suren.
Thank you very much, and wishing you the very best for the new fund offer of Bandhan Contra Fund.
Yeah, thank you.
For our viewers, I would request you to please press that like and subscribe button. It is very easy to do that. You just have to click. It happens automatically to receive such wonderful updates on the YouTube channel of Advisor Coach. Thank you very much. Thank you, Ashish. Thank you very much.